I don't know about you guys, but I am just sick and tired of all these, real estate agents or housing economists, analysts, what have you out there uh, with their narrative spin and talking about all this, pent up demand for housing. When in reality, I can't find any evidence of that that's measurable anywhere in the numbers. And it just seems like not even it's more than just a feeling. Most of those guys they won't even show a chart, and if they do, it's like 1 month worth of data, and which gives you zero context. And it's just sort of laughable that we've come to expect that from the industry. So let's just look at the numbers here today for a handful of metros, and we'll let the numbers speak for themselves because we have a demand problem and that's going to make its way through to home prices. So, what we're looking at here is the latest numbers, monthly numbers from Redfin through July 2024. And the way I have this configured, these two charts, is the top chart drives the bottom chart. So on the left-hand y-axis, we have inventory. On the right-hand y-axis, we have homes sold. So the point of showing it that way is to show that home sales are inversely correlated to inventory. So when home sales are really low, as this chart is indicating near term, you have a demand problem. And that's eventually going to make its way through to inventory accumulating. Now, that'll obviously depend on how long home sales remain depressed, but given where we are in the rate hiking cycle, I suspect that's not going to reverse anytime soon. That being said, I expect inventory to continue to snake its way higher, and that will eventually be reflected in that bottom chart in terms of home prices. And I'm just showing, the list and the sales price per square foot uh, below. So, as we can see from a historical standpoint, inventory is still quite low in a place like Atlanta, but we also know that Atlanta, in particular, and a lot of markets across the country, but you know, especially in the Sun Belt, has a lot of investor activity. So we'll just kind of jump around here. Austin, poor net migration near term, uh, overbuilding, way too much inventory, and that is you're seeing it reflected in the sales price moving noticeably lower after it peaked in May of 2022. Let's look at a place like Bozeman, obviously a smaller market, but before this broke out, if you just looked at the structural signs of what was happening there, you knew that inventory was going to spike much higher. And just even in some of the trends and the way inventory has made its way to the market was sort of giving that away. Bozeman, it's going to see significant, in my opinion, depending on how long rates stay at these levels, it's going to see some significant weakness. But again, these things don't happen overnight. So, but look, I want to give this adequate context. Not every market is seeing significant stress. In fact, a place like Charlotte, we know this is a banking hub in particular. Inventory is moving higher, but it's still quite low from a historical standpoint. That's got a ways to go. Cincinnati, very low inventory. Uh, you can say that about a lot of these Ohio markets. Cleveland, in particular, the thing I would point out is the fact that you know there's a lot of older people in this MSA. Typically, older people pay cash for homes, but we haven't seen investors pull back in this market, and it's likely due to just home prices being relatively low compared to some of these other metros, even though they've all pretty much gone up post COVID. Some obviously way more than others. So, and I'll just kind of pick on Ohio here for a second. So Columbus, sort of the same trend. And here's Dallas. Dallas is really starting to uh, show some issues. Sorry, that's my dog. Uh, just there's just so much speculative activity in this market, but it's these same things: overbuilding. You don't have the immediate post-COVID tailwinds where there's just a bunch of inbound migration. And I just kind of want to remind people, like, you typically see, when you go through an economic cycle, that net migration slows and household formation slows. If you're thinking about, possible ways to absorb the housing stock, and you're assuming that it continues to grow over time, if anything changes in that equation, then home prices could potentially be impacted as a result. But here's what I would also say too is, you know, given where prices are right now, this really should not surprise people, and it also shouldn't surprise people that it's happening across markets at different rates of change. So, like, a buyer in, for example, Cleveland isn't going to look the same as like somebody in Dallas or even Nashville. So, I just kind of wanted to make that point before moving on to something else. So, here's Houston, uh, Jacksonville moving up quite significantly. Uh, Again, it's that same, a lot of investors in this market, but if you had looked at the population projections and even sort of the labor force in the area and the mix of jobs, you would have thought, okay, well, that market is definitely bullish. But you've gotten to the point, we're just so stretched in terms of affordability. Pockets of this market are pretty young; they just simply can't afford it. But also, not every person in this market is a homeowner per se. We've seen a lot of renter occupied unit growth across a lot of MSAs, in particular in the Sun Belt, but really a lot of post COVID hotspots. Here's what Knoxville looks like. That's got a long way to go in terms of that market not being tight. So home prices are probably going to hang in there a bit better in a place like Knoxville, although they keep revising their their employment numbers lower. And I know when people are like, well, hey, the unemployment rate's low. No, people need to just get away from that and just focus on job growth and look at it by industry over time in some of these metros. You can easily do that through something like Fred. And what you notice is that Knoxville is starting in ways to look a lot like the Memphis trend. So I could see the unemployment rate really moving up. And that sort of has a cascading effect through not only investor activity, but what an actual household's individual circumstances might be. They may need to sell their home. That's just the reality of the situation. So I would also just add that the demographics do look better here than, say, a place like Nashville. And I know that's hard for people to wrap their heads around because they think about Nashville in terms of it being very stable. Uh, it's a healthcare hub, but look, I would just point you to just the abundance, especially post COVID, of just bachelorette parties. Just literally, they've overrun this town along with just tourism broadly, and we are a more cyclical economy. By extension, our labor force is too. That's what the numbers show. So we can look at Las Vegas. Obviously, this place got pummeled last cycle. Golly, look at that move in inventory. Beginning of 2022. That's crazy. That's those are investors. There's no doubt in my mind. Okay, jump down to LA. That's still a tight inventory market. Still low supply, relative to history. But I would say in general, just California has really, really just demographic sort of poor demographic outlook in terms of a lot of these markets are much older, which usually shows up as more homes per capita, and by extension, the average household size is usually smaller because older people don't have necessarily people living with them. Add in a lot of investor activity, and especially on the international side, and voila. Miami, I don't really have any, kind of like LA, I don't have a whole heck of a lot to say just because it's like New York 2.0 these days. And, you could have speculators continue to pile in. Miami is notorious for that, by the way. I think most people know that. So here's Nashville. And I'll just quickly add my 2 cents as to why, even before inventory broke out higher, especially city center, why, if you had just been looking at the structural dynamics in this market, uh, there's way too much new construction, and permitting should tell you that. Even if you normalize that across different markets, uh, city center is much younger than a lot of different markets. The household size is smaller. It's a lot of non-family households, all of which points to a very poor demographic profile in terms of somebody who's able to afford housing, whether renting or owning. We have a lot of non-family households in Nashville, in particular in Davidson County, versus say like a family household, like a married couple with kids. And the differences between those two really just get right into affordability. Non-family households just make less than family households. They're just more volatile. Uh, you add in slowing net migration. Nashville, in particular, is we have a lot of inbound international migration. So people moving from out of state into Nashville, where they're moving from, those unemployment rates are starting to pick up meaningfully, and we're starting to finally see it in the inventory numbers. Really should not surprise people when they have now seen it break out, but they still do. They're still surprised by it. So I'm going to look at this. We'll show this information another way. Instead of uh, list price and sales price at the bottom, we're just going to, the top chart is the same, but what I've done is I've broken both inventory and homes sold out by property type. So you can see what that just looks like in a place like Atlanta. A lot of single family, right? Denver, or not Denver, Austin, condos, but single family participating in terms of inventory. Bozeman, good bit of condos. Let's see, Cincinnati. I mean, wow. It's going to take a while for that to unwind, right? I think it could pick up in terms of pace, because again, getting back to the unemployment rate, we're late cycle. It's totally normal to see this stuff sort of pick up. There's Cleveland. Again, these are older people. A lot of people in pockets of Cleveland, they bought in cash, or they've been in their home for a long time. They may be retired. So that may not necessarily reflect a market or impact a market like Cleveland as much. So Houston, and I'm just jumping around here. There's Huntsville. Wow. Well, that's one to keep an eye on. Smaller market, but holy cow, look at that inventory. Jacksonville, here's a detail. Here's Knoxville. Decent mix of condos and single family coming to market. And let me just show, the big one here. New York. Guys, I got nothing to say about that. I mean, that could stay wonky for a really long time. This cycle has taken quite some time to work through. Now, look at Nashville. Look at all those condos near term. Still not the bulk of our housing stock. I mean, structurally, we're still single family, but they're certainly trying to put a dent in that. Okay, so let's look at some. We'll just finish up on some, cross market metrics. We'll look at months of supply, percentage of active listings, price drops across just a handful of markets we've already looked at. And I've got this kind of zoomed in so you can see it a little bit clearer. And really to see those near-term trends for months of supply and active listings with price drops. But I mean, as you can see, Denver, those are some pretty weak markets. Austin, Dallas, uh, and then obviously Cincinnati. It's got some ways to move up, but as you can see, price drops are picking up in terms of active listings. Nashville, that is going to move higher. Active listings with price drops, and you're as a result, you're going to see just based on the structural supply, there's way too much supply in Nashville, especially in Davidson County. Although uh, the MSA is not immune to those effects either. Just when you go through this, when you go through a rate hiking cycle, and especially where we are in terms of the rate hiking cycle, it's fairly late. So anyway, I'll finish on that. I mean, hopefully that was halfway informative. But again, I would just say, look, we got to get away from you know relying on some talking head on TV to tell you where home prices are going, or a realtor telling you you got to buy now, when in reality they're just not looking out for you. I mean, just don't be naive. You really just need to focus on the data. The only reason I do this is I just want people to be informed, whether it's like one or two people or 10 people. I don't really care. It's this whole thing is kind of cathartic for me, uh, to be honest. So look, all we have done today, and I don't want anybody to be intimidated by charts, because these are basic trends that anybody can learn. So, but okay, just to wrap it up, we can look at this by county, by city, by zip code across the country. I have that information too, even the labor data, even the demographics. So lots of different ways to look at this, gain even more insights. And if there's a market you want to look at, or maybe a topic, maybe just demographics at a local level, or whatever it may be, I'll see if I can potentially make that happen. So, all right, guys, that's all I got. I hope everybody has a good rest of the week.